Boy, that time flies when you're having fun, doesn't it? Welcome back, though, guys. Hope you had a fantastic day out there. But it's time to get back to work. Wednesday morning, brand new month is right around the corner. It is is that correct? The 30th day of the month of November, 2021. Finishing up the month of November. And as always, my name is Joseph. And welcome back to your nightly newsletter. And if you're watching for the first time tonight, it is great to have you with me. My job tonight is to help us fund the best trades, setting up for tomorrow, not just any Wednesday. Got some big news tomorrow. Brand new month starting tomorrow. Going to be a busy Wednesday tomorrow morning, wherever you're trading, or of course with us in our trade room tomorrow morning. Got a lot of great trades on our radar for tomorrow. Got some spike in channels on the Emini and the oil. Nice spike in range on the Nasdaq. I love spike in channels, spike in range patterns. They make our plan so easy for tomorrow. So in tonight's video, we'll talk about my favorite trades to capitalize on these spike in ranges and spike in channels. And of course, you know me, I'll also make sure I give you some stuff to avoid tomorrow to keep yourself out of trouble, whether you're trading on your own or you're trading with us tomorrow in our trade room. As always, before we jump into the video tonight, though, and get this party going, make sure you subscribe to our YouTube channel. I publish these videos every evening. I don't want you to miss tomorrow night's video, so make sure you subscribe. If you have any questions for me, drop those questions in the comment section. I would love to answer any questions that you might have along the way. And if you enjoyed this video as much as I enjoy making it, do me a favor, hit that like button for me. Appreciate you guys carving some time out and joining me every evening on this YouTube video. Don't forget to subscribe, right? But enough of the intro. Let's get this party going here. Wednesday is right around the corner. I still can't believe we're talking about December 1st tomorrow morning in our trade room. So what do we got going on right now? Lots of spike in channels, right? Spike in channel here right now on the E-mini, spike in channel here on the oil, right? Spike in channels are really, really powerful because they really give us some really nice levels, in this case because we're so bearish, to short into. So I'd love to short some pops here on the S&P. I would love to short some pops here, right, on the oil. And of course, you know me, right? I'm going to make sure we know exactly when a pullback turns into a reversal, because in case you weren't paying attention today, these markets have been a little bit volatile lately, right? So this could easily start ripping, going higher here. So I definitely will talk about how to tell the difference between a pullback and a reversal, right, on these spike in channels here for tomorrow. Over on the Nasdaq is similar. It's got a range right in the middle, right? Basically a spike in range right now. I have some great levels of resistance that I would love to short going back down on this Nasdaq. As you can see, though, we have a little bit of support issues though in the way, so we'll have to make sure we trade around that. And again, just like on the S&P, really anytime we see a support trend line, we know that gives that blows the window wide open for the buyers now to possibly get their own reversal. So we'll talk about how to trade the pullback. We'll talk about trade the reversal, and you know me, I'll cover everything in between as well. Now tomorrow, got a big day tomorrow. Got some more big news. It's a brand new month tomorrow. Let's double check that schedule for tomorrow, because I want to make sure everybody can on the same page here for tomorrow. Now, I talked about this last night. We're going into a new month, all right? So we know we're going to expect some increased volatility. And I laugh about that. I laugh a little bit because we sure saw some volatility in today's trading session. ATRs were all very high. We had 2.9 ATR on the S&P this morning. Just really kind of unprecedented. So we definitely had uptick in volatility today. I would anticipate that's going to continue here for tomorrow. Now, also, as I mentioned in last night's newsletter, we've been dealing with Powell, right? Powell kind of lit the fuse today at 10 o'clock. He is talking again tomorrow. He will be doing his kind of second day of testimony, but I don't anticipate that being as big of a reaction. As I mentioned last night on the newsletter, usually when he has a 2-day testimony a couple times a year on Capitol Hill, the first one is usually the one that really gets the markets moving. The second day is usually not that big of a deal. So just be aware of that. He's probably not going to be the most important important thing here for tomorrow. The most important thing for tomorrow is going to be that ISM manufacturing index at 10 o'clock Eastern time. Yeah, we got the ADP employment report, the PMI, we got the beige book. If you're an oil trader tomorrow, you definitely want to be, sitting on hands around that petroleum status report tomorrow. But I'll tell you though, the big news tomorrow, again, because we got Powell out of the way today, and he'll do his thing tomorrow as well. But that ISM manufacturing number is going to be most likely the biggest market catalyst for tomorrow's trading session. Now, just like I said last night, whenever we have a big event at 10 o'clock, you have to kind of think, right? 9:45 to 10:45 is probably going to be where you get the best price action entries tomorrow morning in our trade room. Obviously, we'll be trading all day tomorrow, right? But if you could only trade for an hour tomorrow, that would definitely probably be when I would keep an eye on those charts here for tomorrow. As I mentioned earlier, that ADP employment report, that sounds like a pretty big number, but I wouldn't expect much out of that. What's going to happen is that's going to set us up for Friday's non-farm payrolls. That's the employment number you got to worry about. Don't worry about that employment number tomorrow on Wednesday morning, right? So, quick recap, brand new month, right? So increased volatility. Don't worry too much about the employment number or that Powell speech. The ISM manufacturing index, that's the one that has the potential to really light this puppy on fire. And again, if you're trading oil tomorrow like we do in our trade room, keep in mind, I like to use that 10-minute buffer, 10 to 15-minute buffer, so 10:20 right to 10:40, and then get back after it on the black gold tomorrow morning on the oil futures. Now, speaking of tomorrow morning, don't forget, we'll be in the trade room 8 o'clock Eastern time. I would love to have you there trading these markets right along with us. I provide all the cheat sheets, all the checklists, right? And of course, all the real-time updates as we go. I'll put all the links you guys need for anything we talk about tonight. I'll put all the links down in the description of the YouTube video. So grab that link or hit that button right below me tonight on the website. And I'll see you tomorrow morning at 8 o'clock Eastern time. Let's get back to our charts though, because we got a lot to cover here, and this time is ticking here right now. S&P, Nasdaq, oil, these are all ready to go here. Got a lot of really nice trades on our radar for tomorrow. Why don't we start first here with the Emini S&P? In a nutshell, basically what happened was, kind of as we had anticipated, in last night's newsletter, we had these buyers struggling, and they sure as heck didn't waste any time today. Strong move down. The sellers, of course, complete their measured move. As we always say, anytime we see a strong move in one direction, we expect a retest of that low and, of course, right into a symmetrical measured move. That pretty much takes us here into this spike in channel. Now, spike in channels are really very common. In fact, I would say this is probably a top 5 chart pattern that every trader should learn. And the reason why I say that is because this whole area here, right up into the base of that channel. Let me add a little more to this here, because in all reality, you could really kind of really put this thing even a little bit higher up on the ladder here right now. What you want to think of is that this channel, and there's your spike, okay, where the channel runs into the spike is where most of the best entries are going to be. It's very, very, very simple, right? So what happens is the market takes off the downside, starts to channel lower, and eventually nobody wants to sell down here. We get down to the measured move, obviously. We take out that low. And so now we expect some profit taking, a bit of a bounce. And this is where, when I was a new trader, I would get in trouble because I would confuse this bounce with a reversal. So how do we know what that reversal looks like? How do we know when we can short this? Okay, let's talk about this, because that's definitely going to be a big part of the game plan for tomorrow. What you want to remember is as we go higher here, the buyers have to hold a pullback to take control. Okay, and you're going to see this a lot in bear markets, and the opposite is true in a bull market. So if we pop off this low and these buyers come in, they try to buy that pullback. If they hold it, right, if they can hold it and jump, this becomes a reversal. right? See back over here how they got above the moving average, but they couldn't quite jam it. Those are the signs of things starting to collapse. So the way I sell this market is, what you want to think about here is three types of pullbacks, right? There are three basic types of pullbacks in kind of a trending environment, right? One of them is a shallow pullback. So for example, if all we get is a little tiny pop higher and the market starts to roll, I like to look for what we call trap entries, right? Traps are an easy way to avoid selling too low. What you're doing here is you're getting those buyers to commit, but because we're so low on the chart right now, remember, you want to sell as high as you can. That trap setup will be the way to do it. Let's say we go a little bit higher here, right? Take out this high above us around 97, right? We pop up a little bit higher. Now what I can do is I can wait for those buyers to try, and if they fail, I can use what I call a failure into pullback combination pattern. Now, these are two separate entry setups, right? One is called, again, a failure. The other is that pullback combination. Remember, what we're doing here is we're waiting for this pop up. Bears take their profit, right? Price pops up off of that low. The buyers think this is my shot. When they go into buy now, do the buyers have control of this trend? No, they don't, right? A strong pop off the low is not a reversal. They have to hold it. So if they can't hold it, all their stops now are sitting right below that low. I can hit those stops with a failure. I can then grab that. Remember, first test is always the best test, right? I can always grab that failure and that pullback setup now as we try to go back down to retest the low. Now, here's where things get even a little bit better, really. If we can really pop up, right? Sometimes we see these really sharp pullbacks here, right? If we really pop up here now, what does it take to qualify a reversal? The buyers have to hold it. So the stronger they pop, well, I shouldn't say the stronger, but within reason. I'll talk about what I mean by that in a second. Within reason, right? Because eventually, if it keeps on going and going and going, obviously this will not be a bear market. But think about, right, up in this area here, right, that 46.13, 46.14 area, we really pop up now up into the base of that spike and channel. Now give those buyers two tries. Right? Because remember, the stronger the move up, the more gutsy these buyers are going to get. Let them try once, let them try twice. Now their stops are sitting right there. Okay? And again, it's very simple. Think about a strong signal candle coming off, right? And short back down again. Now, real quickly here, what you want to remember is as this, we call these two-try failures, as this two-try failure starts to roll lower, it oftentimes pulls back for a nice little trap entry, and if you can, find a new channel and hit it off the top of that channel, right? So really deep pullback, that'd be the third pullback we talked about tonight, right? First one was a shallow pullback trap. Second one here is basically a failure pattern, right? Third one now, deep pullback, is a two-try failure because, again, the buyers are really going to be, beating their chest, trying to get this thing going higher. Once those buyers realize they're wrong with that nice strong signal, we can short that one. And then one of my favorite kind of add-ons to this move, as the market now starts to turn over, I find that new channel, right? Find that new channel and then hit that trap, right, off the high of that channel. I'll tell you, this is one of my favorite little combinations, a failure into a new channel and a short off the high of that channel. These can be one-try failures, two-try failures. They can be trap entries. There's a lot of different ways we can apply this. In fact, I have probably 100 or so examples of these types of situations, all kind of included in our Quick Start class. If you haven't grabbed it yet, you definitely should. I'll put a little link in the upper right-hand corner for you. I provide a full roadmap. I call it my 3-step strategy to determine the right levels of support and resistance and the right entry setups to use in each type of market condition. I'll put a little pop-up there for you. Not to mention there are hundreds of examples of those failures, traps, first test pullbacks. So definitely grab that link in the upper right-hand corner. If you're serious about your trading, if you want to get more consistency in your trading results, that little 3-step quick start class will bring you right up to speed with how I like to trade every day in our trade room. Now, let's keep going. How do we know when a pullback turns into a reversal? Okay, so we talk about one of them, right? So one of them would be we pop up, we hold the pullback, right? And we jump off the moving average. Okay, none of this stuff here like that. Okay, that's a failure, and we're selling it right back down again. But if those buyers, if they can explode, right, and really jump, and they will, right, with this much bearishness, if the buyers really have control of this, they will jump off that moving average. Once they get the jump, then we go into action. We don't want to chase it going higher, right? Want to buy low. So we do is we mark up a high, find a new trend line, right? Mark up the low now. And I like to drill down to a faster time frame, obviously. This is a 9,000 tick chart because we had so much volume in today's trading session. Drill down to a faster time frame and find the entry off the low of that channel. Now, a lot of times these entries, as the market goes higher, a lot of times I'll find traps, right, below prior swings, mark up those prior swings there. My favorite place to trap, a failure into pullback combination. Again, you'll see a lot of examples of these kind of combinations, trap, failure, pullback combos. You'll see a lot of examples of that inside that quick start class, that free class I mentioned earlier. And where's our target? Our target is obviously back up, right, to retest the high. Another thing you want to keep in mind is if they do successfully get this breakout, the size of the breakout leg can be used as a measuring leg. All right, so kind of think about how big that reversal is, how big that leg is. That'll help you now kind of figure out what is likely to be that final objective. Again, the high of day is easy, right? It's pretty obvious. But as we go higher, remember, think about what was the size of the breakout leg. I don't know how big it'll be right now, right? We'll know tomorrow, obviously, more information. But that's how you find kind of where those targets are going to be as you want to go, right? As you want to go higher. There's one more kind of reversal pattern here we'll talk about here, but let's keep going because I'll talk more about reversal patterns on the Nasdaq. I've got a couple more that I want to go over, but I want to keep this video moving for you. So if you want to learn more about my favorite reversal patterns here, make sure you watch until the end of this video here tonight. Okay, what if we don't pull back at all, right? What if we blast and run lower here? Right, we blast and run lower. Couple things. There are probably two ways, maybe three different ways I can trade this thing as it goes lower. If it does go lower, I've got my eyes on this runaway zone at 45.25, 45.26, right? That whole area down there. Now, I can use that same 1, 2, 3 breakout or 1, 2 reversal. I can use that same idea here, right? So we take off the downside. We're sitting at the lows. The bears come in and they say, no, we're done. And they jump off the moving average. Bingo. Mark that low, mark that high, drill down to your faster time frame, find your trap entry, find your pullback failure entry, right? Get above that moving average, get those traps, those buyer failures, those pullback combinations. Same thing we just talked about on the move going higher. Another one of my favorite moves going lower would be a strong run down. Let's say the market falls apart, right? Strong run down, start to fall apart here. Shallow, right? Shallow pullback, barely touches the moving average. Lower low in price. That is a green light for a trap. One of my favorite trades. I'll tell you, the last probably 6-8 months, that's been one of my favorite trades in our trade room. And as I always say, if you can find a channel on this, do it, right? It's not required, but it sure as heck doesn't hurt, right? We call these 2-try traps. Remember, strong move down, shallow pullback. The shallow pullback is what gets this thing really. It really could be called a FOMO entry because that shallow pullback drives everybody crazy. They all want to get in on that. That lower low in price confirms the move, and sure enough, right, we look for that trap on the way down, right, to that 45-25 area as we're going here. Can I buy it as the market goes lower? If the market runs lower, could I buy this thing? You can buy it, but you better stay patient because obviously we're very bearish right now. So if we do go up and we end up all the way back down again, how would I qualify a long trade? You'd want to use a kind of a variation of that 2-try failure. I call them crown reversals. Wait for 1 try for the bears, wait for 2 try for the bears, and I like whenever I'm going significantly against momentum, right? Whenever I'm really going, momentum is very bearish. If I'm going that much against momentum, I really want these bears to try twice. Let them empty the clip, if you will, right, into that low, and then once they start seeing seeing that little jump against them, you know what's going to happen. Most sellers already know they're selling right into that low. They already know they're playing with fire, selling down there. So once you get that nice strong signal coming up, that's a really nice, easy way to buy this thing going back up off of that low. Because there is a range right here. There is a range right there. For all I know, we'll go up, come back down, 1, 2, back up, and we might get stuck inside this range for a while tomorrow. Who knows, right? Anything is possible. So at this point, we've got ourselves covered, I think, pretty good here on the pullback, right? 3 types of pullbacks, and of course, a couple of reversals going higher. Let's keep going, though. Let's keep going. A lot more to cover here right now. How about some Nasdaq? Now, Nasdaq is very similar to the S&P in the sense that we have this really big bear move down, but you'll notice there's one, I think, pretty significant difference here, difference here on the Nasdaq. There isn't a spike in channel. Basically, simply put right now, as we had anticipated yesterday, they had that range. Market pulls back really strong, 1, 2, and right back up again, retest the high. The buyers could not hold it though, could they, right? Buyers, of course, now fail. Price drops that back down. Okay, the strength of that leg is what I'm using here to kind of factor in where that measured move target may be. We'll have to wait and see how far this market pulls back here for tomorrow. But ultimately, it's a bear market. It's basically a spike into a range. That's basically what it is, right? So we know that ranges act like magnets, right? If you were to put a volume profile on this, it would probably be something like this, right? A little bit of volume up there, a lot of volume back there, right? So there's a good chance, right? This area here acts as kind of a magnet for price after we see this pop off the low. Whenever I have a range in the chart, whenever I have a range with a bearish bias overall, all you got to do is find levels of resistance. Remember, the range acts like a magnet. So look left, find levels of resistance. Could be this one, could be that one, could be this hidden channel, could be that rising trend line. You can see why I like that area, right? You can see why. I think it's pretty obvious. That area looks like a great area now to short back down again. Here's the problem, though. Here's the one problem we have in our way, and that is that rising support trend line. Now, rising support trend lines, I'll tell you, this opens the door wide open for these buyers, right? Because if the sellers can't, if they can't get their arms around this thing, this could easily end up ripping, and short squeeze, right back up to retest those highs. And as I kind of joked around about in the introduction today, this market's been a little bit on tilt the last few weeks here. So there's no reason why this thing couldn't just rip and run right back up to those highs. So our big challenge right now is it's kind of like the S&P, right? 3 types of pullbacks, and then a couple ways we can trade a reversal, but we have to just be careful with this rising support trend. That's the big variable that we have to worry about. So shallow pullback, absolutely. If all we get, I really like this. I really like this trend line right there. It lines up nicely right in this sweet spot right there. I like the area a lot. So what you want to kind of think about is this. If we see a pop up and we see a pullback failure, I can't take that trade, right? It might work. It might, right? But I can't take that trade. It's right into that rising support. It's just not a reliable enough trade. It doesn't give me enough meat in the bone to take that trade. So what you want to think about is because of that rising support trend line, think about that shallow pullback trap we talked about on the S&P, right? Buyers try once, buyers try twice, and the only reason why I need those 2 tries is to get me in on a trap. And then those traps will oftentimes run lower, and they'll end up pulling back later on, and you'll be able to use that trend line literally as an area of resistance, right? So kind of think about how this will play out. So we pop up, we run into resistance overhead, right? We like that. But now the buyers try once. Again, I'm not going to trade right into that trend line here. I'll wait for the 1, the 2. And again, the only reason why I care about 2 is because I want that trap, right? I want that trap. Now, if for some reason I don't get that trap, right? Let's say it goes up and comes right back down again. You want to keep your eyes on that next little, what we call two-legged pullback, right? Where you got one leg, two leg, down, up, and over, right? Those will be the ways you want to trade this thing if all we get is a really shallow pullback. Now, where would my targets be on this, right? Where would my targets be? Well, first target I mentioned earlier, get that big leg down, right? That's going to give us an idea of where that measured move is. Remember, it's this leg right here, right? It's that leg right there. That leg right there, not the whole leg, right? It's just this little guy right there, from that high to that low. That leg right there will be used, right, for our big objective going lower, all right? I don't know exactly where it'll be just yet, but it'll be using that size. I will also be looking at a pendulum swing. So the range is a magnet, right? Mark up the amount above the range, the amount below the range. That'll be a really nice secondary target as we go lower, all right? Now, as we pop up, right? Now, if we go really high up here now I don't need that trap as much, but I do still have to worry about what? Momentum. Yeah, right? So if we really pop up off this low, the trend line isn't the concern anymore. Now it's momentum. And this is exactly where you wait for the buyers to try once. You wait for the buyers to try twice. One of my favorite ways to do this, by the way, I talked about how the trap is always kind of the best one, right? Always the best. Traps are always the best. They get you the best entry price. They kind of put you in a position where you're almost in safety, because the buyers aren't going to buy up there. One of the more common ways to do it, though, is just find a trend line off that high, right? Nice strong signal, closing below the moving average. You'll learn these rules, by the way, a lot more than that, obviously, inside that quick start class. So grab that little link up there in the upper right-hand corner and join that free trading course. So we have the 1, the 2, and again, I can sell below these lows, but I'd really like to get that right off that level of resistance. It's a pretty good rule of thumb to make sure whenever you're selling, sell off resistance. That's going to make sure you're selling really high and not chasing the market going lower, right? A good rule of thumb to follow when you're buying is make sure you're buying at support. I know we all know this, but it's amazing how many losses I avoid by just simply following that rule. Sell at resistance and buy at support, right? So instead of selling it as it goes lower, I sell it when it comes up to a level of resistance. It kind of gives you a lot more flexibility, a lot more breathing room in that trade. And then again, if we can get that big drop going lower, watch that trend line, right? Because that trend line will definitely be something. We usually end up getting above the moving average. The buyers come in, try to buy it, and you can, of course, short that failure as we go, right? So a little two-try failure, a little breakout pullback there below the trend line. That would be how I look for this thing to short as we go higher here. Now, how do we buy it? How do we buy it here? Well, we talked about the one already, right? Pop up. They're going to hold the pullback. This could easily happen. This could easily happen. We're bearish right now, but again, that trend line just blows the door wide open here because the bears may walk away from this, right? And this big move down was pretty much induced by some news today. So it can easily evaporate here tomorrow morning. If the buyers can hold this pullback and jump, right, we mark up that high, we mark up that low, we drill down to our faster time frame, right? We find our trap entry, our failure entry, our pullback combination. And again, where's our target? Well, we know the high up there at 56, right? That'll be an easy target. We also know, again, the size of that breakout leg. Right? Remember, think about that breakout leg. That breakout leg is a very reliable way to figure out, okay, how high does this market want to go? We know the high of day is an easy one, but that'll help you kind of fine tune kind of where that final objective will be as we go higher. I also talked about, right, the strong move up, right? Strong move up, shallow pullback, higher high in price, that trap. We talked about that two-try trap as we go. Here's another one too. I call this kind of the pop and grind, if you will. Let's say it pops up and we start to grind and go higher, right? Grind and go higher, right? What happens is the short squeeze, right? Because the sellers are getting out. Sometimes what'll happen is the market will pop up and they don't need any buyers there, right? They don't need buyers to come in and buy that. They have all the buyers they need from just the sellers getting out of their short positions. That's all that is, right? This can be a bit frustrating because you're like, come on, pull back here for me. And it can be difficult. What you want to do is, like always, buy low, right? Buy at support, mark up that trend line off that high, go all the way back to the very low there, draw that channel up, and you know what I'm going to talk about, right? Find that trap, get underneath the moving average, get those failures, get those pullback combos, right? Now, a lot of times it can be scary buying up here, but remember, anytime you have a really strong move in one direction, it's almost a guarantee they're going to pull back and retest that high, right? Anytime we see a strong move in one direction, it's almost a guarantee we're going to pull back, in this case, retest that low. That's why I always tell my clients one of the easiest ways to make money in really any market is to wait for these strong breakaway moves. We don't need to predict those breakaway moves. We can always wait for them to happen and then structure the entry to capitalize on the retest, right? That's a really easy way to think about trading. And then that's probably it as far as the moves going higher here. As we go lower, we definitely have the same thing going lower right now. Now, going lower, there's actually a little bit more we can do with this, right? So as we go lower, we've got that 1, 2, 3 breakdown, find that new channel, short off the top of that channel, right? We talked about that already, right? Strong move down, shallow pullback, lower low in price, that 2 try, right? That 2 try. That will be a great trade going lower here. Don't worry about where you are. If we get enough, if it really runs and goes lower, right, hit that trap. Nothing's perfect, but there's a good chance that trade will make you money there as we try to go down and take out those lows. We get kind of the pop and grind, right? Pop down, we grind down, we find that channel. You got it, right? We mark up that trap, right? That failure pullback combo as we go. One more here. Think about this area now as an area of resistance. Okay, the market collapses, right? Or let's say we do this. Let's say we go up, right? The buyers once, buyers twice. We collapse back down. We get that beautiful short, right? Everything's firing all cylinders. Now we make that big, strong, right, push going lower. Watch that pop and that breakout pullback. Very basic. Keep your eyes on those lows right below that trading range. Wait to get that pop and then trap in those buyers with a buyer failure. I still don't know why this trade works so well. I really don't. I'm not sure why anybody falls for that. Well, you know what it is? It's the bounce. The bounce is what makes it feels like we're going right back up again. These are usually pretty typical. They'll get a strong move down, whether or not we get the entry or not, right? Strong move down. And then this area right here, what happens is they get that almost like a V bottom. Right? It's almost like a V bottom, right? It V bottoms off the low. It spooks the buyers. The buyers can't help themselves. They're trying to go back up here again because apparently it's gone too far, right? The famous last words, right? Those expensive famous last words. And we grab that buyer failure. It's almost like a breakout pullback, right? Off the underbelly of that range. I don't like breakout pullbacks unless I get that really strong push. As I tell our students in the trade room, you want to see some separation. You want to see it. You don't want to be taking breakout pullbacks like this, right? Where it kind of barely, that's not the one you want, right? You want to see some serious separation. Get through that area, then pull back strong. That'll give momentum, all that momentum now. Remember, anytime we see a strong move, we expect a retest. Just wait for those buyers to get caught, right? And trade back to retest the low. All right, so get some I think some pretty easy trades here on the Nasdaq. What we're going to wait for now is how the market opens up, right? And we'll see that here in a few minutes here as we open up in Asia. And again, we get that big news number tomorrow morning at 10 o'clock Eastern time. Let's keep going. Let's wrap things up here with the oil. Oil is kind of a combination of both of these charts now that I think about it. As you can see, oil had this big strong push down. Right? Makes sense that they would retest their low, and it makes sense they would go hunting for a measured move. Okay? The size of that leg is what I'm kind of using here to identify where that next target's going to be at that low. This is not rocket science, right? This is not going to the moon here. That's pretty simple stuff, right? So we have that idea already nailed down. What is kind of interesting here, though, is you can definitely see there's a range right there, right? You can definitely see that range right here, and see how difficult it is to find those breakout pullbacks like this, right? See how difficult it is right there. This is a really good example of why I like to get some serious separation, then pull back and get that failure. Right? You can see right away, right there, right? This is exactly what we were talking about before on the Nasdaq. It's very difficult when you barely get underneath it. You know, this isn't enough proof yet. So that is very interesting how we just talked about this, obviously, on the NQ. There's your range. There's that strong breakout, and you can already probably tell kind of why I like this area, right? Because that's exactly what I'm looking for. Remember, strong move down. Look at the strength of that move down. Right? Really strong move down. You know those bears want nothing more than to finish off a retest of that low and probably try to get that measured move as we go. What is a little more interesting, though, is the spike in channel. There's my spike. There's my channel, right? There's my spike. There's my channel. Now, this is an interesting situation. Obviously, the base of that channel is way up top here, right? Around that 69, a quarter or something like that, right? That would be kind of what the buyers would love to get themselves back up into that area here. And honestly, guys, it's still probably going to be good for a short because you have that range right below you. We'll talk about more about that here in a second. What I think is really interesting, though, is if you take the overshoot of that channel and you pop the overshoot onto the high, right? Think about this overshoot, right? The amount we overshoot that channel low is oftentimes the amount we'll overshoot that channel high. So that's going to kind of create this battle zone, if you will, right? Excuse me, this sell zone overhead. Sorry about the hiccups. Okay, so we know we're bearish, right? We know we're bearish. This pullback is relatively strong, but again, look at that last leg, right? That last leg makes it very difficult for me to want to buy this until what? Until we start to see some proof of the buyers holding. So what you want to think about here now is a lot of momentum going lower. We get that nice pop up. We go up into these areas of resistance. You know what to say, right? Let those buyers come in and let them take a swing at it. If they fail, you know exactly where you want to short, right? Get that short on that failure. Get that moving average coming over and grab that first pullback, right? That failure into pullback combination. One thing to remember is if we just collapse, right? If the market collapses as you go lower, because sometimes you just simply don't get that pullback, right? Find that trap. That trap is perfectly acceptable too, right? So we pop up, buyer failure. Maybe it's a quick pullback. Maybe it's a trap entry. Doesn't matter, right? We know where the market wants to go. Find a way in. Using those price action setups, the failures, the traps, the pullback combos. Again, you'll see hundreds of examples of those on markets like crude oil, S&P, Nasdaq, gold, inside that quick start class, right? You'll love that stuff on the website. So that's how I want to trade this, right, as it goes higher. Now, what if we really pop up, right? What if we really pop up? Because again, it's a spiking channel. If we really pop up, you know this right now, right? Let them try twice. Let them try once. Let them try twice. Stops are right there. Do we get lucky and get a trend line? Do we get lucky and get a trap off that, right? Doesn't matter. Again, let them try once. Let them try twice. If you can get that trap, great. Trend line, great. Stops are hanging out right below that low. And then remember, these will almost always drop like this. And when they do, find that new channel. Yeah, mark that trap. You know, and I always say, right, traps are the best. Sometimes you don't get them, though, right? Trap, failure, pullback combo. You know where we're trying to go. Right back to retest that low here. All right. Now, how do we buy this market? That's the tough part in this one, right? That's the tough part in this one. I think it's all going to be about how this thing looks when it gets up here, right? So, you know, for example, do we continue here to run, and do these buyers hold and blast? You know, it's going to be tough to want to sell this if they get up into this sell zone up here and they hold that pullback and blast right through it. If that's the case, I'm marking the new channel. I'm going to drill down to my faster time frame, right? Find that failure, that pullback combo. Again, we've talked about this quite a bit so far tonight. I won't bore you with the repetition of that anymore on this. But find that, right? Find that channel as we go higher. It's going to take quite a bit of a pop and a hold for these buyers to get their hooks in this thing, because as you can see, there's a lot of overhead resistance here. So it's really got to get up. The buyers have to really do a good job at holding and popping. The pop off the moving average will be the biggest part of this. It doesn't really matter to me how strong the pullback is. We see strong pullbacks all the time when a market is this bearish, and it ends up just collapsing right back down again, right? So they really got to hold that pullback and pop, right? If it starts to really cook off that moving average and that pullback, again, it doesn't matter where you are. If you have enough momentum, you're going to probably be okay on it. Mark up that high, mark up that low, right? Drill down and find one of those entry setups we talked about throughout the video here tonight. All right. So we got that moving. This could also be a strong move up, two try trap. Any of these reversal patterns talked about today, right? That strong pop up and the grind, that could happen. That definitely could happen, right? We pop up now, but again, short squeeze, right? Some headlines come out about OPEC overnight, right? It short squeezes, it grinds and grinds, right? You know what I mean? That's obviously reversal. Mark up that high, mark up that low, right? Same thing. Find those traps. Don't chase it. Get that trap, that failure, that pullback. That'll work as well. All right. So now you kind of know what I'm looking for here as we go higher here. If all we get is a pullback right now, right? If all we get is a pullback, if we don't go any higher here, there's that failure, right? Into pullback combination, failure into trap combination. Again, a lot of this is repeating myself. I apologize about that, right? But, again, a lot of momentum going lower here, right? I would also, too, keep in mind tomorrow, if we do end up back at this low here, we may end up in a range down here, right? What do you do with a bear market into a range? You find levels of resistance above the range, yep, and you wait for the pop up. You don't force the reversal, and you don't predict the high, right? We don't sell into it. You can if you want, but I've always found it's much easier rather than trying to pick a top, right? Especially with a small stop loss. You're more than welcome to pick tops and bottoms if you want to. I always wait for the pop up. That new range acts like a magnet, and just simply wait for the buyers to come in, let them show their cards, and once they do, hit them, right? Hit them right where it hurts. That'll be an easy trade for us tomorrow as well. All right, guys, I know I've covered a lot in this video tonight, so if you have any questions, drop those questions in the comment section below. And don't forget, we're going to do all of this together tomorrow in the trade room, 8 o'clock Eastern time. I'll put all the membership information, all the free course stuff, I'll put all that right below me tonight, either on the website with a big button there or linked up in the description of this YouTube video. Don't be a stranger either. I'm always here to help out. If you have questions about brokers or charts or data or anything we talk about tonight, don't be afraid to call the office or shoot me an email or drop a comment in the comment section below. Hope you learned a lot tonight. Hope you guys have a restful night's sleep, because tomorrow could be another busy day tomorrow in our trade room. Have a great day tomorrow. If I don't see you guys tomorrow morning, the opening bell, and you better come back and see me tomorrow night, because we're going to keep this party going this entire week here. First day of the month tomorrow. I'm excited. Hope you are as well. I'll see you guys next time, guys. Adios, amigos. Bye-bye for now.